Welcome back to Explain the Charts, everyone. I'm your host, and today, September 23rd, 2025, we're zeroing in on one of the market's heavyweights, Microsoft, under the ticker Microsoft. The broader market sentiment has been quite volatile recently. The Dow, S&P 500, and Nasdaq have seen periods of record highs followed by significant pullbacks, with the tech sector often leading both the rallies and corrections. Macroeconomic factors are playing a huge role. The Federal Reserve has already cut interest rates once this year and is signaling two more cuts are likely within 2025, reacting to signs of a weakening labor market. Fed officials have even highlighted that there are no risk-free paths now, indicating a cautious approach to monetary policy, which directly impacts growth stocks like Microsoft by influencing borrowing costs and investor appetite for risk. Let's bring up the daily chart for Microsoft, spanning from May 2024 right up to yesterday, September 22nd, 2025, to get a comprehensive view of its journey and long-term trends. Despite what was arguably the strongest fiscal Q4 2025 earnings report among big tech, with revenue jumping 13% and operating income climbing 16%, largely fueled by its robust Azure cloud and burgeoning AI services, Microsoft's stock has found itself in an unexpected rut. This underperformance is a key anomaly, especially when almost every other Magnificent Seven stock has moved higher, sparking considerable debate and concern among analysts and investors alike. One theory attributes this to a broader sector rotation, with investors possibly shifting capital from software-focused companies like Microsoft into semiconductor stocks, which have seen a surge of their own recently. Another significant headwind is the intensifying scrutiny from regulatory bodies. The EU, for instance, has recently targeted Apple, Google, and Microsoft over concerns about online financial scams, potentially leading to fines or operational restrictions. This regulatory pressure, combined with potential shifts in investor preference and the general market's dynamic nature, sets a complex stage for Microsoft's near-term price action, making detailed chart analysis more crucial than ever. Notice the clear long-term uptrend leading into the July peak, forming a solid base of investor confidence over the past year before recent challenges emerged. To dissect this rut more closely, let's zoom in on the daily chart for the critical period from August 2025 through September 22nd, 2025. We can clearly identify the stock hitting its 52-week high of $535.64 in early August, a natural peak following the excitement generated by its strong earnings report in late July and strong AI sentiment. However, instead of a continuation, we observe a distinct reversal pattern, with the price forming a series of lower highs and lower lows, indicating a short-term bearish trend has taken hold since that peak. A pivotal bearish catalyst was the news of CEO Satya Nadella's sale of $75.3 million in company stock on September 3, 2025, which, while part of a pre-arranged plan, occurred amidst a broader tech sector sell-off and undeniably added to negative sentiment. The chart dramatically reflects this, with the September 5th candle showing a sharp decline and increased selling volume, pushing Microsoft decisively below the critical psychological support level of $500. This price action signals that insider activity, especially from the CEO, can significantly impact investor confidence and trigger pronounced market reactions, even when fundamentals appear strong. Further contributing to this bearish narrative are strategic concerns. OpenAI, a key Microsoft partner, is reportedly developing its own AI chips with Broadcom for 2026, aiming for greater independence. There's also talk of a massive $300 billion cloud deal between OpenAI and Oracle, implying a potential long-term diversification away from Microsoft's Azure cloud, which could erode Microsoft's competitive edge in AI infrastructure. The possibility of OpenAI launching an AI jobs platform that could directly compete with LinkedIn adds another layer of competitive pressure, highlighting potential challenges in Microsoft's diverse ecosystem and service offerings. Therefore, this period on the daily chart encapsulates a struggle between strong underlying business fundamentals and a barrage of negative news, market rotations, and perceived competitive threats. The recent bounce from near $495 shows some resilience, but the overall trend on this time frame remains cautious. Now let's switch to the 1-hour chart and zero in on the immediate, rapid reaction of the market around September 5, 2025, which clearly illustrates the intensity of the selling pressure after the Nadella news. The hourly candles vividly show the stock opening on September 5th at $509.07 and swiftly cascading down to a low of $492.37 within just a few trading hours, confirming a significant intraday bearish engulfing pattern that effectively wiped out days of prior gains. The accompanying surge in volume during these hours, far exceeding the preceding hourly averages, indicates a panicked liquidation rather than gradual profit-taking, driven by heightened market anxiety and a clear, immediate shift in sentiment. This dramatic hourly move also established a new, immediate resistance level around the $500 to $505 zone, which the stock rigorously struggled to breach in the subsequent hours, solidifying the new overhead supply and confirming a strong short-term bearish bias. For short-term traders, recognizing such sharp, high-volume moves on shorter timeframes is crucial, as they often highlight key breakout or breakdown levels that can dictate price action for days or even weeks to come, providing actionable entry and exit points. The speed of this move also suggests a lack of underlying institutional support at those higher prices, making it a very strong bearish signal for intraday trading strategies and highlighting potential weakness for days to come. Expanding our 1-hour view to encompass the period from September 5th through September 12th, 2025, we can observe the subsequent consolidation phase and the failed attempts at recovery following the initial drop. Despite several attempts, Microsoft repeatedly encountered significant resistance around the $500 to $502 price band, suggesting a strong bearish ceiling had formed at this critical psychological level, acting as a magnet for sellers who were likely trapped at higher prices. Each rally, even minor ones, was met with renewed selling pressure, leading to the consistent formation of multiple lower highs, a classic technical indicator of a continued downtrend that prudent market participants should heed when considering positions. Notice the brief, energetic rally on September 11th, which pushed the price towards $513.84. This could have been fueled by short covering or speculative buying, but it notably lacked sustained conviction, eventually retracing and reinforcing the prevailing range-bound behavior rather than a true reversal. This consistent inability to sustain upward momentum underscores the prevailing bearish sentiment on this intermediate time frame, making short positions more appealing for aggressive traders operating below key resistance zones and utilizing tight stop losses. The price action here clearly delineates the $495 level as a significant short-term support, indicating an area where buyers step in to prevent further declines, while the $500 to $502 zone now acts as a formidable resistance that bulls urgently need to overcome for any meaningful and sustainable recovery to take hold. The continued presence of high trading volume on these corrective moves further solidifies these levels as important battlegrounds between buyers attempting to find a floor and sellers eager to cap any upward momentum, illustrating dynamic supply and demand. The pattern of decreasing daily highs and consistent resistance at $500 to $502 suggests that overhead supply is still significant, requiring a strong catalyst to break free. For the most immediate insights, let's pivot to the 15-minute chart covering the intense, granular trading activity from September 19th to September 22nd, 2025, to capture the very latest market pulse and micro trends. Here, we observe heightened volatility and rapid shifts, particularly on September 19th, where around 1948 Universal Time coordinated, a sharp, high-volume buying surge propelled the price from approximately $511.50 to a peak near $519.30. This impulsive move, potentially a rapid reaction to specific intraday news, perhaps related to Microsoft's recently announced $7 billion AI data center investment in Wisconsin, quickly established a new, albeit short-lived, resistance at its high point of $519.30. However, the rally was not sustained beyond this initial burst, and the price subsequently entered a tight consolidation phase, ranging primarily between $517 and $514 into the close of September 22nd, indicating a delicate balance between demand and supply at these levels. The smaller candlestick bodies and relatively higher volumes within this narrow range suggest a fierce tug-of-war between buyers and sellers, with neither side currently gaining decisive control in this very short-term window, pointing to market indecision and equilibrium. For agile day traders, the immediate crucial support is around the $514.45 level, established as a dependable floor on September 22nd, which buyers have defended, while the $517 to $519 zone represents the overhead resistance from that recent, impactful spike. A decisive break above $519 on strong, confirming volume could signal a short-term continuation upward, potentially offering quick scalping opportunities toward the $520 to $522 range and confirming bullish conviction. Conversely, a clear break below $514.45, if accompanied by increased selling pressure, might lead to a rapid retest of lower intraday levels, possibly targeting the $510 to $512 zone, invalidating the recent bullish momentum and signaling bearish control. Bringing it back to our overarching daily chart for a holistic perspective, let's synthesize the key factors influencing Microsoft's outlook in the short and long term, providing you with actionable insights. The long-term bullish case for Microsoft remains robust, anchored by its relentless innovation in cloud services, particularly Azure's consistent double-digit growth, and its aggressive expansion into the burgeoning AI sector with substantial investments like the new data centers. Microsoft's fundamental strengths, including its diversified revenue streams across enterprise software, gaming, and hardware, combined with its strong free cash flow and consistent dividend, provide a solid foundation for future appreciation and shareholder value. Conversely, the short-term bearish narrative is shaped by recent events such as the CEO's stock sale, the ongoing rut post-earnings despite strong results, and escalating competitive concerns related to OpenAI's potential shift towards Oracle's cloud and its independent chip development. The broader market sector rotation out of traditional software into hotter sectors like semiconductors, alongside increasing regulatory pressure from entities like the EU regarding online scams, also dampens immediate enthusiasm and adds to investor uncertainty. Recapping the absolutely critical price levels for traders and investors to watch, we identify strong support around $495, which has acted as a resilient floor after the significant September 5th drop and subsequent attempts to retest. Should this crucial $495 level be decisively breached with high selling volume, the next formidable support zone would be found much lower, in the $400 to $410 range, which represented significant accumulation points and acted as strong support earlier in 2025. On the upside, immediate resistance is posed by the $517 to $519 zone, the high point of the recent 15-minute rally, followed by the more substantial and historically significant resistance at the August 2025 52-week high of $535.64. For an unbiased predictive outlook, there's approximately a 65% likelihood that Microsoft will continue to consolidate within its established $495 to $519 range in the very short term, especially if there's no dramatic market-moving news or significant change in investor sentiment. A confirmed breakout above $519, backed by strong buying volume and clear catalysts, presents a 35% probability of a push towards and potentially beyond $535.64 by the year's end, particularly if positive catalysts like new AI product announcements, strong Q1 2026 guidance, or a resolution to OpenAI concerns emerge. Conversely, A sustained breakdown below $495 on increased selling volume holds a 25% likelihood of a descent towards the $400 to $410 support zone, especially if negative news regarding OpenAI's independence or broader economic weakness takes hold and triggers widespread tech selling. Keep a very close watch on upcoming earnings reports, any further corporate announcements regarding OpenAI partnerships or competitive initiatives, and the Federal Reserve's next interest rate decisions and their forward guidance. These events will serve as potent catalysts, either reinforcing current trends or triggering significant reversals, dictating Microsoft's trajectory in the coming months and requiring traders to stay agile. Always conduct your own due diligence, integrate your analysis with broader market understanding, and ensure your trading and investment decisions align with your personal financial strategy and risk tolerance before taking any action.